How an investor can stop leaning more towards assumptions and start investing based on facts and evidence. Industry expert Amrita will explain this now.
Always enhance your knowledge, focus on fundamentals. If you do not know the PB ratio, P ratio, standard deviation, Sharpe ratio, all of that, always seek an expert guidance, take a second opinion, keep a journal of your observations. Like when markets had corrected, I remember a friend of mine panicked during 2015 when China had devalued its currency and Indian equity markets on a single day had fallen by 1,500 points. 1,500 points correction. He was a anti-Modi person. So he was like, look at the government. They have come in. This will become a Gaurashtra. Look at the way market is falling and all of that. I said that I think the fundamentals of our economy remain same. And if the market has fallen by 1,500 points, if it is a 5% correction, this is the right time to invest because markets will go up and you will actually make a 5% absolute gain. And that kind of an observation was correct. I was able to give some handholding. It's other thing that he did not take my advice. But when we again connect, because he's a good friend of mine, and I remind him of that incidents, yes, there is still some ego of defiance, but he also accepts it that, yes, his thinking was very much driven by current economic situation, political situation, etc. As much as I've said not to overlook, be calm and think long term, but certain times you also have to take into account negative news. Please look at objective ways, goal-based investing. Because when you are focused on goals, which is I'm saving for my retirement, I'm saving for my house, then your focus is towards achieving that goal. And you will avoid yourself from getting succumbing to all short-term noises. Invest for the long term with periodic review. As I've said, Sensex has gone through many ups and downs you can see. And yet in the last 10 years, it's literally given almost a 12% return, 11.5% or 12% return. And from 2013, a lot of reasons that happened were all foreign reasons that impacted India, be it taper tantrums, which was US threatening to take out quantitative easing, Chinese currency devaluation, somewhere internal reasons like policy paralysis, demonetization, external reasons like COVID and US-China war, Russia-Ukraine war, now Israel-Hamas war, etc. And yet the index has given you a 12% return. So long-term investing is required. Nothing like, as I've said, the good EMIs of SIP and STP. They are very, very good. Asset allocation, portfolio rebalancing, I've mentioned earlier, review your portfolio, but sometimes it can be very difficult to do it. So your financial advisor will suggest you to look at certain manufactured products that is automatically allocating into different asset classes like multi-asset allocation fund, balanced advantage fund, hybrid fund, etc. So the benefit of SIP, STP, asset allocation is they are all emotional management tool.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.